Okay, we continue our the topic for this week, which is the sustainable reporting. Okay, so we stopped just now at the information needs for two types of investor. Okay, so we continue. Okay, so we said that sustainability reporting has become more widely accepted and relied upon, and certain sustainability disclosure have become mandatory in the United States and other countries. Okay, so at the moment, the most widely accepted set of standards. Okay, so when we want to do reporting, the question is, since just now we said the structure, okay, it's different. Company A maybe will present using this structure. Company B maybe present using this structure, and so on. So, of course, when we are talking about the financial reporting system, when we want to organize one generally accepted standard of reporting, we need a framework. Okay, so at the moment, the most widely accepted set of standards, of framework is that promulgated by the Global Reporting Initiative, or we call as a GRI. And if we look in 2017, 75% of the Fortune Global 250 companies use the GRI reporting system, this is the indication of the dominant role of in the global reporting. Even some of those that do not use GRI reporting, okay, what they do is they borrow certain elements that are listed in the GRI. So this process we call as GRI informed reporting. Okay, for example, IKEA. IKEA did not use the GRI, but it used certain element in the GRI. Okay, so later on we will look on the example of IKEA. So, for example, IKEA, when it said in its annual report, it said that IKEA inspired by GRI, G4. G4 means one of the guidelines in the GRI, which is the only focus on materiality and reporting of impact across the value chain. Okay. So how GRI framework developed is actually GRI framework was developed through a consensus seeking process. Okay, it's not an easy process. So who is the participant that during this process we are talking? The participant is from business, civil society, labor and professional institution. Okay. So it was initially published in 2000 and has undergone several iterations. So it's not an easy process. So if we look through 2013, it was published a set of guidelines. And the most recent version of GRI is the G4 guideline. So this is the most recent one. G4 guideline, and it's still the most widely used sustainability reporting framework in the world. Okay. So GRI standards is actually organized into 4 broad categories, which is we call as universal, economic, environmental, and social. So in the universal standard, which is in the GRI, they are numbered 101 to 103. This category provides user with the general information about the entity reporting policy. For instance, GRI 101 cover basic reporting issues such as reliability, timeliness, and comparability. Yeah. The second categories is the economic standard, which is numbered from 201 to 206. This category provides basic economic data about the entity, but also address the ethical issue of corruption and anti-competitive behavior. Okay. For the third category, which is the environment, yeah. So in the environment standard, which is numbered 301 to 308, these categories cover topics such as energy, yeah, and water consumption, biodiversity, and the emission of pollutants. Okay, so this one is more on pollution. And the last category, which is social standard, which is numbered 401 to 419, these cover a broad array of topics, which is related to labor practices, human rights, product responsibility, and so on. Okay. Oops. Okay, so since even though it's the GRI just now divided only into 4 categories, but it's still considered as a broad area of topics. So the broad area of topic that can be addressed in sustainability reports. So this, because of this one, it provides a challenge not only for both reporting entities, but also to our readers. Okay? Why? Because how do you want to report? As for the entities, how do you want to report the, all those broad areas in one reporting? And for the readers, it's how the readers want to extract the information if, okay, the information is overload. So the problem of information overload, okay, become the threat to the useful of sustainability reporting. So what happened is GRI is concerned about this problem, so they introduce materiality as reporting criteria. So remember, when we learn in traditional financial reporting, materiality is always used as a rule of thumb. So in the GRI system, materiality is defined in 2 dimensions. Okay, so they define in 2 dimensions. One, we said the materiality of information that important to the stakeholders. Another one, materiality in perspective of which is important in day-to-day management of business. Okay, so to make it easier, they divided the materiality into the 2 areas just now. Okay, so we didn't say this is non-financial materiality because we are talking about the information that related to the social and environmental. So we will look on 2 things. Okay, we are talking about GRI just now. So besides GRI, because we said GRI is the most widely used framework, but of course, besides the GRI, there are other sustainability framework. For example, we are talking about SASB, Sustainability Accounting Standard Board. We will look on this one later on, which is, this one is widely used in US non-profit organization. We also have Carbon Disclosure Project. So for this one, for this framework, it's only focused on carbon emission. Okay, and also focus on water and forest usage. And we also have other standard which is related which is ISO but related to the environment. For example, we are talking about ISO 26000, which is related to social responsibility. 14001, which is only focused on environmental management. 13485, which is only focused on medical device quality. 45001 on OSHA, okay, and 37001 on anti-bribery management system. Okay, and we also have RoboCOSM, okay, corporate sustainability assessment. So this, what is this? This is actually annual survey which is related to the what is the economic factors, environmental factors, and social factors. Okay, and this is primarily sustainability ranking tool used in construction of Dow Jones Sustainability Index. Okay, New York. Yeah, so it used in the Dow Jones Sustainability Index. Okay, so as I explained in the earlier of this class, this video, I said that the sustainability reporting is based on voluntary basis and it's not regulated. But because of most people or public aware the importance of CSR, especially when we are talking about the environment, so there are effort that towards mandatory of sustainability reporting. Okay, for example, the most far-reaching mandate is European Union Directive 2014/95/EU, which requires member nations to implement mandatory sustainability reporting for large entities, generally those with at least 500 employees. And under this directive, acceptable reporting framework is include the GRI. So they didn't say what is the framework can be used, but include in that one is GRI. And the OECD guideline from multinational enterprise, MNC, okay, and the International Standard Organization, ISO 26000, okay, and enacted in 2014, which is the directive is now in full force in all 28 countries in the EU. Okay, and if we look for the Hong Kong, okay, in 2015, Hong Kong Stock Exchange, HKSE, okay, enacted a set of comprehensive sustainability reporting rules that come into force in 2016. So this one get in force in 2016. The rules follow a disclosure or explain approach. Okay, so what happened is the Hong Kong Stock Exchange, they set a robust set of sustainability related KPI. So the firm must either report these KPI in the annual report, or if they choose not to report this KPI, they have to give reason why it can be determined. Okay, so the reason must be given. Okay, so what is the KPI? So this is among the KPI that's set by Hong Kong Stock Exchange. It's air pollution, greenhouse emission, amount of hazardous waste produced, consumption of energy, water and packaging material, work hours, workplace safety, workplace discrimination, supply chain risk, product health and safety, measure to prevent bribery, fraud, extortion, money laundering, and description of community engagement activities. And each of these KPI, they has specific metric for measurement. Okay, so it's not only the KPI, but the Hong Kong Stock Exchange also provide the specific metric for measurement. So each company that listed in the Hong Kong Stock Exchange, they must determine and they must report each of these KPI. And if they didn't report things, they have to disclose, okay, in the annual report why they cannot determine this KPI. Okay, and if we look in the US, for example, US law, there's specific reporting requirement. Okay, so with respect to the sustainability reporting, and they make this report available to public, which is this one is they're using the Freedom of Information Act. Okay, so for the SEC required the sustainability reporting. What they required? They required the climate change disclosure, which is consists of the business description, legal proceeding, okay, risk factors, and the MDM. Okay. Another framework, okay, as I mentioned earlier, we also have the SASB, which is Sustainability Accounting Standard Board, and ASB is what we use in the US non-profit organization. Okay, so this is the most important development in US over the last decade, okay, where they are actually founding and subsequent expansion of the SSB. So the SSB is a non-profit body modeled on its counterpart, okay, in traditional financial reporting, FSB. So this SSB, okay, is a counterpart, okay, of FASB. Okay, remember the FSB that we learned before. Okay, so the SSB has developed a comprehensive disclosure framework that resembles those of its international counterparts in many aspects. Okay. However, what is different of SSB? SSB different from its international counterparts, which is its only focus on investor information needs and linking its framework to the reporting requirement of US security law. Okay, so they only focus on investor need and they link the structure or the reporting on the requirement of the US security law. Okay, so they also focus on, we are talking about non-financial materiality just now. Okay, so they also focus on the non-financial materiality, which is, okay, the linkage between its metric and disclosure requirement. Okay, and one more thing is actually for SSB, there are one of the SSB most significant contribution is actually its materiality map. They are published, they develop and publish of materiality map. So what is materiality map? This map is actually ranks the level of importance, okay, a particular sustainability topic as for a given industry from an investor perspective. So they will rank, okay, because we said just now they are broad categories, they are broad topics of the sustainability reporting. So what the SSB do, they rank this topic based on the investor perspective. Okay. Another framework is carbon emission reporting, but the carbon emission reporting is only special for industry that produce fossil fuels or large consumption of fossil fuel. For example, we are talking about mining, power generation, and heavy manufacturing. Okay. And many in this industry, they're making such disclosure to get ahead of the situation. Okay, and for some country, it's become a mandatory for this type of company to disclose their carbon emission reporting. Okay. So we already discussed about the few types of the framework just now. So right now we look on what is the sustainability reporting practice of MNC, multinational company. So basically there are 4 levels of sustainability reporting. Okay, for example, some company will do comprehensive reporting within GRI. Okay, so example for the company that at this level is Mazda. Some company, they are not disclose comprehensive, but they will use GRI as a guidance. They will use a part of GRI to make the reporting. So we call this one as GRI informed reporting. Example is IKEA. Another company, they will link their link between sustainable reporting and traditional reporting. So this one we just set as integrated sustainability reporting in the traditional reporting. So for example, Baxter International. And some company, because of they do the sustainability reporting because of mandatory sustainability reporting required by SEC. So this is the example is the SEC Exxon Mobil. And another one is for some company, the reporting is given assurance by external parties. Okay, so because we said the sustainability reporting is volunteer, it's not compulsory. So because of that, so the sustainability reporting is also the external assurance. What is mean external assurance? External assurance is like the audit. Okay, like the Ernst & Young audit the financial statement, then they give the audit opinion. So this is the same thing. Okay, but since the sustainability reporting is not compulsory, so that external assurance. So normally it's only voluntary basis. Much greater flexibility in designing scope of assurance service since it's just voluntary, so they do not have a fixed designing scope. But almost 50% company in GRI database actually are externally assured. Okay, so we end our video for part 2 here. We will continue at the part 3.